Good afternoon, friends, and Happy New Year. And I'll be, as usual, presenting the macro situation for the country. And the theme is whether we're getting out of the painful situation we find ourselves in. Okay, so here's what we will cover today. The, Starting off from the dark clouds in the global horizon and looking at some glimmer of light, both globally and in the Philippines, and then looking at some of the factors that should bring us out of the storm and some caveats or risks that we still are there lurking. And then we'll end up with a macroeconomic forecasts. Okay, so dark clouds we've seen in the past year has been the Russia's invasion of Ukraine, the global economic recession that's just setting in, elevated inflation, and rising interest rates. To be sure, those are formidable. However, we'll see that what has happened is that the IMF has downgraded its forecast. The graph I'm presenting to you right now is what they projected in October 2021 for 22 and 23. And that's and for the following year, I mean last October 2022, they had to reduce drastically the forecasts. Here you can see that the world economy, they expected it to be grounded to by 0.9%, while it was biggest for the EU as a group, minus 1.5, ASEAN minus 1%, and US and China minus 0.9. Okay, so together with that, at the same time, we saw the monetary policy hikes being carried out by central banks across the world, increasing in number as presented by the IMF. And but although there's a glimmer of light there, that there seems to be some pause that is likely to come this year. But all in all, there's been a global uncertainty, which is shown in this IMF graph. It's indexed, showing the height of the pandemic, the most uncertain. And then the highest achieved uncertainty was quite low in 2021. But it went up again as Russia invaded Ukraine. It has moderated since then, but still higher than any time during 2021. So let's look at the factors that show a glimmer of light in the global economy in the form of easing crude oil prices, slower wheat and industry and commodity prices, a slowdown of monetary policy tightening. So first of all, we look at the crude oil situation where the U.S. Department of Energy, EIA, specifically has projected a decline of around 9% on average for the year, both for Brent and WTI. And if you look at the graph more closely, we can see that there are 3 out of the 5 quarters starting this previous quarter. Well, inventory was up, meaning production exceeded consumption. So we look at wheat prices is a good indicator for food commodities, and it's back to 2021 levels. And rebar steel prices for construction is also down to 2019, actually, 2019 to early 2021. And copper prices are at first quarter 2021 levels. So there's some easing in commodity prices that gives us a glimmer of hope for the global economy. But looking at the Philippine economy, we can see some more light. First of all, we have a domestic demand-driven economy. We're having still some fiscal space, which will allow us to have stronger infrastructure spending and housing spending, and then consumer spending will remain robust. Let me elaborate on this. our strength has been domestic demand, meaning our growth has been domestic demand driven. It can be seen in the blue bars, which usually exceeded the red bars, which is GDP growth. Domestic demand growth was in the last quarter. Q3 was 9.5%, and previous to that was 11.8%, compared to 7.5 and 7.76%. So, and that is can be seen, will be also be seen in the coming year. Oh, sorry, this year. It's about this fiscal space. To be sure, our debt ratio had risen from 39.6 to 60.5 in 2021, and we do expect it to reach 63% and below 63% by end of 2022. However, the increases will be slight in 2023, and we expect declining thereafter. Note that the impact on interest payments as a percentage of national government spending has been very mild because despite the increase in debt ratio, because interest rates were low until recently. Okay, so we said that with fiscal space, we have investment spending leading the way, as it has been so in the past quarters. And you can see last quarter was 21.7% growth. And we can expect that there will be more infrastructure spending. The government budget has been raised, the DPWA's budget by 12.1% over last year, and from an original 4.9%. We can continuing major infrastructure projects, both PPP and done by the government. And most likely we'll have more PPP projects going on stream since the IRR of the BOT law had been revised more recently, October 2022. And a new BOT bill, which is a more comprehensive, has been passed by the lower houses and now in the Senate. In addition, we have the revised Public Service Act, which limits public utilities to a minimum. So it should encourage foreign investors to get into and invest into airports, electricity generation, distribution, and all kinds of joint ventures. Okay, so just to go through briefly the ongoing infrastructure projects. The biggest one would be the Metro Manila subway, also the North-South commuter rail, which is another big item in the rail space. But even with the DPWH, we have Davao City Circumferential Road, the way it's called completion, then the Boracay Circumferential Road, and then Metro Manila Flood Management Project, Phase 1, which is an overall plan up to 2030, which involves more than 300 billion. For this year, this coming year is only about 33 billion is expected. For the PPP projects, we still have the CALAX here and the NLX SLX connector by the MPIC group. And the connector is going to be very important because it will allow cargo trucks to pass through that expressway, going to the port area, which means that the traffic below will be east, especially C5. Okay, then you have MRT7, which will be partially open, then extension of the LRT1 to Bacoor continues. And you have the South Luzon Expressway already ongoing. Still just about San Pablo, near San Pablo. Okay. It's going to be all the way up to Lucena. Then you have in the pipeline to be bidded in the first quarter will be the Metro Cebu Expressway project, a huge project involves 9 tunnels. So there's plenty of action in the infrastructure space. And if you are interested, just go to the website of the DPWH and the DOTR, and you'll find a lot of opportunities there. Okay, so let's look at the mass housing, where the plan is at least to address the 6 million backlog. Very ambitious thing, but with the people behind it, we're quite confident we'll make a headway here. There will be a good amount of seed money that will be put, and then the creation of, or actually strengthening of the Fannie Mae type of secondary mortgages. But also there will be LGU participation as they could provide the land. Then we have robust consumer spending, which some may be a little bit worried about. But this is because we have seen record employment levels. If we're going to have a cut in personal income tax, 3 to 4% peso depreciation would affect positively the purchasing power of 60 to 70 million Filipinos, and we have a high positive outlook for the coming year. Let's take a look at the employment, which drives consumer spending. Despite inflation, which has been due to high crude oil and food prices, we see it's going down towards the target of the BSP by year end. So the key driver of consumer spending will be employment. You know, we have 5 records already since August to November, with November topping it at 49.7 million jobs are employed. And year to date, the additional jobs created was 3.4 million. Now compare that against the 1.1 million new entrants to the labor force, which means that it's more than enough to absorb them, and that's why we've seen higher employment at record levels. And then finally, we have the consumer sentiment, which this based on an SWS survey last December. We can see that it has improved. Well, the view towards the following year in 21 to 22, and now 22 to 23. So we can see in the overall gains in the total country, but except for Metro Manila, we're so close to the trees that we get a bit, a little bit disconcerted by certain things that need not to be very worrisome. The balance of Luzon and Visayas show very strong gains, which is very heartwarming. I mean, the now is steady, and so we will have also to boost our consumer spending OFW remittances. You can see the growth, positive growth 3 to 5% in 2023. You see the red line going at 20%, the 4 peso converted remittances. The caveat with that is that those remittances they're around 37 billion will not be sufficient to cover the balance of trade deficits, which this year will reach around 58 billion and will rise further to 60 billion, which is very high, nearly comparable to pre-Asian crisis levels in terms of percentage to imports. So the peso will remain under pressure, although we're seeing a temporary relief. Okay, so there are these other caveats on food inflation, China invades Taiwan, a real global economic meltdown, but I view them with low probability. So then I therefore will summarize with my forecast, inflation rate going down to 4.5, peso dollar depreciating further to 57.59, then your reserves should grow, and then GDP will be at least 6%, driven by the services sector, which has been recovering, particularly the accommodations and restaurant services. In summary, therefore, we can look at a brighter future despite the dark clouds that are gathering abroad. So with that, I end my presentation and hope to be able to clarify some points as we go along. Thank you and good day.
Okay. Thank you very much, Dr. Abola. On the global front, Dr. Abola is expecting dark clouds ahead. However, I like to think that I'm a glass half full kind of person. So I'm happy to hear that there is a glimmer of hope with the easing crude and commodity prices, slower monetary policy tightening. And on the home front, it seems to be more positive. Growth in domestic demand from consumer, government, and investment spending, infra spending, and a debt to GDP level that is still considered to be okay at approximately 63%. So for 2023, our magic numbers are inflation is expected to be at 4.5%, the dollar to peso at 57 to 59, and GDP at 6. There you have it, ladies and gentlemen. And as I had promised earlier, we can entertain a few questions for Dr. Abola before the next speaker.
Okay, I think you want me to answer now. Karen, there are some questions already here in the chat box.
Okay, go ahead, sir.
Vince Mercado, what are indicators for food inflation lowering? Actually, if you look at the seasonally adjusted numbers in inflation and CPI last month, December, which is usually a reason why food prices would go up, it actually slowed down in terms of growth. It went, slowed down by more than a half. So from 1.1% the previous month, and then it's gone down to 0.5. It's also in the actual, not only seasonally adjusted. So the food inflation has been brought about by vegetable, fish, and meats. Of course, we can do quite a bit on vegetable and fish because that's can easily be sourced locally, and the gestation period is quite short, so 1 to 2 months. So I'm not worried so much about that because I think that it's being exacerbated by our reality that onion prices are 700, 800 pesos a kilo. But I think we're seeing the peak of inflation. We had seen it in the December. We should be expecting it to go down to 7% and progressively down to 6% in the second quarter, and so on, and back to the target of BSP. Then there's a question about what is the forecast of the USD PHP for the next 3 months. This is there's a slight tendency for appreciation until you can see what happens in the US. I mean, the interest rates of US. If 10 US goes up further from where it is right now, and that means that there will be again a pressure on the peso. But the real thing here that will be over a longer period will be driving the peso weakness will be our huge trade deficits. It's about 40% of our imports.
Okay, Dr. Abola, there's a question on the agricultural sector. What is your outlook?
Agriculture sector, yes. As I said, there are already moves to address the bottlenecks in agriculture. One thing that is they're trying to do is equivalent to what's in the commerce space is the one town, one product. No? So they try to do that also in agriculture so as to ease the pressure on, let's say, vegetable, which we source a lot of from Benguet, all right? And that one reaches even Boracay and the Visayas. So there's that move to have developed production clusters around nearer the urban centers. So as I said, maybe it's not tomorrow, but I think that over the next 3 to 6 months, we will see very big improvements in agriculture.
Okay, there are a lot of questions that are coming in. We're going to try to pick as many as we can, and then we will reserve the others for the panel discussion as well. There's another question here. Do you consider a resurgence in the pandemic a risk, considering what is happening in China and the relatively open borders? What are your thoughts on
I'm
that?
not very worried about the so-called pandemic because I don't believe this is a new one because I've seen exactly the same description of the virus around 8 months ago, 9 months ago, and it's now resurfacing. China had not been very much affected before, but it's just they don't have the natural immunity, which we now have, and the other countries have. There's no move in Europe, for example, to pull it back, or in the US, precisely because it has been shown scientifically that natural immunity is much more powerful than uh, any of these viruses. So that's how I view the pandemic.
Okay. Like I said, Dr. Abola, there's a lot of interesting questions. Maybe we can have one more, and then we can proceed to the next speaker. But before
Okay.
that, I'd like to thank once again, we have about 903 participants listening in on this economic briefing. So we'd like to thank everybody for taking the time out to listen in. Okay, another question we have is, won't the slowing pace of the Fed rate hike and BSP rate hikes support the peso despite trade deficit concerns?
Yeah, I think that the Fed rate hike will have a life of its own because they have a very low target of 2%, and they're coming from 8%. We're coming from 8%. Our targets are 3% in the and the economic situation in both countries are different. So I do. And besides, the BSP governor said that we're not going to follow step by step whatever happens in the U.S. I think that in the U.S. you would easily expect 50 to 75 basis points, or even up to 100 basis points more this year. If, as long as inflation remains high. In our case, with the dropping in inflation rates, I think we likely will have no more than 50 basis points, or there's even a likelihood that it could be as low as 25 basis points. Now, this differential, of course, will put pressure on the peso. That's another reason why I believe that the peso will start depreciating once the Fed starts raising the rates.
Okay, all right, that makes sense now. Thank you very much for that, Dr. Abola.